I'm actually using a version of the software, a new version of Sentient Trader, which we are going to be launching very soon, which causes FLDs and VTLs to highlight. All right, so okay, so those are the two pieces of information that we know. We know that the peak has been formed, but as I've mentioned, that's not really a big problem because we know that peak is there anyway. The second piece of information has to do with the direction of the FLD moving and the direction in which price is expected to move. Now, I'd like to point something else out about this. The fact that price has crossed the FLD doesn't actually change the direction in which they're moving. Okay, that FLD is moving up, which means that the 40-week cycle is still causing price to move down, whether or not price has crossed the FLD. Okay, so that doesn't change, even if our wavelength changes. Now, how much could our wavelength change by? Well, it's unlikely that our analysis is so wrong that this that the 40-week FLD wavelength turns out to be more than perhaps 10 days, 2 weeks, maybe at the most 3 weeks different to what we think it is. Okay, it's very unlikely that this analysis will prove to be so wrong that the FLD will shift dramatically. What's more likely to happen is that the FLD will slide over by a week or two. That's what's more likely to happen. Okay, and as you can see, the direction of that 40-week FLD is not going to change at all if the FLD slides over by a week or two. Okay. Now, the third piece of information, of course, that we get from price crossing the FLD is that we are able to generate a projection. And that projection is calculated from going from the peak to where price crosses the FLD and projecting an equal distance on the other side. Now, FLD projections are more accurate in terms of price than they are in terms of time. It's a very important thing to remember. And so what we should do is just very, very quickly and very roughly we can work this out. It looks like that high price is about 14.10 and the price cross happened at about 13.10 approximately. So therefore we can generate a projection down to about 12.10. So in other words, this price cross is projecting that price is still going to fall into this region here, around about 12.10. Okay. Now, as I mentioned in ST Outlook, and I won't go into too many details, but for various reasons, I think that price projection might be a little exaggerated, and therefore we don't expect price to go all the way down to 12.10. But I still expect price to go down to between 12.50 and 12.10, somewhere in that sort of range. Now, I've been talking about how this FLD might be incorrectly positioned. So what happens if this FLD does in fact slide over? Okay, what if that FLD cross has not yet occurred? Okay, well, yet again, I'll say that if the FLD if the average wavelength of this cycle turns out to be wrong because our analysis is wrong, then the worst that will happen is that the FLD will slide over. Let's take an extreme example. Let's say it slides over by 2 weeks. Okay, let's say it slides to the right by 2 weeks. That means that we are incorrect with our average wavelength for the 40-week cycle by an amount of 4 weeks. That's quite a big change in analysis, okay? But even if the FLD does move by 2 weeks later, then let me try and draw a rough sort of an echo of that line. 2 weeks later, you'll see that line is over there. Okay, so in other words, that FLD would move over there. I see a question from John. Have I looked at the 18-month FLD? In fact, I'm going to get there, John. So I'm going to pop up the 18-month FLD in a moment. So the sort of third and final thing I want to say about the 40-week FLD. Who would have believed I could spend half an hour speaking about a single FLD? The third and final thing I want to say about the 40-week FLD is that even if our analysis is wrong and that FLD shifts, the worst thing that can happen in terms of analysis is that FLD shifts to the right, okay? Which means the price has not yet crossed that FLD. Now, the 40-week trough, which we are expecting to form, and as you can see from this analysis, is expected here in about three weeks' time, roughly. that trough will be a trough of the 40-week cycle, okay, which we expect to form below the 40-week cycle FLD. It doesn't have to. It doesn't absolutely have to, but we expect it to, okay, and it probably will. And because price is so close to that 40-week FLD, the chances are that that trough will probably form below the 40-week FLD, which means that we are still expecting price to come below that 40-week FLD. So even if price crosses below the 40-week FLD in a week's time or in 2 weeks' time, and the FLD, we have to, the FLD moves because our analysis changes, then that price cross will occur probably slightly lower than it has occurred at present, which is over here at 1310. It might occur slightly lower, which would actually cause that projection to be slightly lower in itself. And so again, the fact that the FLD might move on your chart is not a reason for you to throw up your hands in despair and say none of this works. Okay. Gosh, it took me a long time to say that. Let's take a look, as John suggests, at the 18-month FLD, and there it is over there. Right. Now, I'm going to throw in a few sort of comments about the 18-month FLD. And let me just come back. Here we go. Okay. Actually, there are a lot of things one could say about the 18-month FLD. I want to at least give the South African market a brief moment in the sun, not to mention the Nasdaq before today's trader chat ends. So I will make some fairly brief comments about the 18-month FLD. Okay. And let's turn off the 40-week just for a moment. Firstly, just about the 18-month FLD is that it crossed here, a very nice clean cross below the FLD way back in August of last year, and it formed its 18-month trough, according to this analysis again, below the 18-month FLD. So that is exactly the kind of behavior that I was discussing when I was talking about the 40-week FLD. Okay, it's exactly the same kind of thing that we're expecting to occur over here. The other interesting thing, of course, is that price crossed above the month FLD over here. That looks like sometime in February of this year. Price crossed up above the 18-month FLD, which gave us a very late confirmation of the fact that this was indeed a trough of the 18-month cycle, but it also generated a projection upwards, and so let me just clear this and think about that projection upwards. In fact, what I want is change the scale slightly so that I can get a better idea. And in fact, let me zoom out a little bit just to demonstrate my point, because this is the analysis that we're looking at here. Okay, I just want to get that 54-month cycle trough there. All right. So when price crossed this 18-month FLD there, we would have generated a projection upwards. Okay. And so that was from a low of about, call it 1100, to the level at which that FLD was crossed, which was I think it was about 1320, but let's say let's call it just above 1300. So we would have been looking at a projection up of 200 points, okay? Because from 1100 up to 1300 is about 200 points. So we would have been looking at a projection upwards of 200 points. In other words, we were possibly expecting the market to get above the 1500 level, okay? So what went wrong? Why wasn't that projection achieved? All right, and as Lucas says, a 1500 high. Why wasn't that projection achieved? Because of the very, very critically important thing that you have to bear in mind always. For those of you who have done the workshops, you will know that the correct answer to any question is underlying trend. Okay, and the correct answer to this question is underlying trend. Why was that 18-month target not achieved? Because of underlying trend. In other words, the underlying trend for the current 18-month cycle is most probably downwards. Okay, and why would that underlying trend be downwards? Well, it's fairly clear. That's why I zoomed this chart out so far. Here is the 54-month cycle. The 54-month cycle trough, rather, in March of 2009. And so the 54-month cycle, of course, will have been rising for the first 1.5 18-month cycles. Then it will have turned down and started heading down. So the 54-month cycle, the next longer cycle, is pushing downwards, as you can see from that very rough sort of semicircle that I've drawn there. The 54-month cycle is pushing downwards, which means that even when price crossed that 18-month FLD just above the 1300 level, although the projection theoretically went up to the 1500 level, that projection was expected to be underfulfilled, undershot. Okay, we didn't expect price to get that high because of the underlying trend of the 54-month cycle. Now, you could get complicated and say, but what about the next longer cycle? And that's a fascinating discussion, but we don't really have time for it now. Some people, and I know John's one of them, is who I believe is proposing that, in fact, the 9-year cycle might have occurred in March of 2009. But we'll be here for another 3 hours if I start trying to talk about that. So let's just move on. Let's just accept that the fact that the price target of a high above 1500 was not achieved by price over here, where it went up to, what was it, 1420 or something like that, is an indication that indeed the underlying trend of the current 18-month cycle is most likely downwards. Okay, as it was expected to be. Okay, so one final thing about the 18-month FLD, and this is not something that that to my knowledge Hurst ever mentioned, but it's something that I have often noticed, and I often mention it, ST outlooks and my market commentaries and all that kind of thing, and that is that. That is, the price often tends to come down, and it tends to ride along an FLD for a while. And I've noticed that FLDs often form support or resistance levels. Okay, there's something quite interesting happening in this 18-month FLD, which I use, and I use it for my own sort of personal ways of looking at the market. This is how I tend to look at things. I've noticed when this inverted W shape occurs in an FLD, can you all see that W shape I've drawn there? That that the center point of the W for an FLD, that center point of the W very often gives you quite a good, accurate idea for when, in fact, the shorter cycle is likely to form a trough. What's the shorter cycle? The 40-week cycle.